Doug Flynn and Art Hogan are with us right now. Art, the chief market strategist at National Securities. Doug Flynn is the co-founder of Flynn Zito Capital Management. Guys, good morning.
Good morning.
Good morning.
Art, we're going to talk about kind of the tech industry's game later on in the show, but let's talk about these trade talks in general, because right now stocks are very sensitive to any comments about the progress of these talks. But the U.S. Chamber of Commerce has come out, Art, and said that they don't believe that the Chinese are really coming to the table in good faith. They speak for American businesses who don't want to put their name out there. Do we really listen to the Chamber in this part of the discussion?
Well, we certainly do, but I think I'll tell you this, Cheryl. I think the lead here is exactly correct when you said the market is very sensitive to this. If you think of, there's not a headwind in the market right now that's larger than the China trade situation. We saw that multiple times over the last couple of weeks, where a modicum of good news was celebrated in the marketplace, and yesterday's story or non-story about preliminary talks causing the market to sell off. And when you think about yesterday's biggest driver, the IMF, lowering their forecast for 19 and 20, and sort of coupling that with our overarching concern about global growth, a lot of that really is tied up in how we think trade talks are going. So I think that removing trade as a headwind, I think, would be probably the largest of the positive catalysts in this market right now. And it feels like we're on the right path. It's just the message gets cobbled up when you have a couple different camps in the administration, messaging this differently. I think when you hear Larry Kudlow, you feel a little bit better about this, but then when you hear Lighthizer, perhaps you feel like we're not making up as much ground. I think we're on the right path and doing the right thing right here.
And many have said that the White House needs to get kind of singular when it comes to their messaging, and I think you're making that point very well. But, Doug, the other issue here is the shutdown and the messaging, and we just had a reporter tell us that there still seems to be this stalemate with regards to the shutdown. We're at day 33. How important is that to you as an investor and as an analyst right now?
Well, historically, shutdowns actually are not a negative for the market, and although we've never had one this long, we've also never had performance as good in the market during a shutdown before. So we get the best market performance in a shutdown ever. In the long run, if it starts to weigh into things like GDP and whatnot, however slight it might be, that could be an issue. But in the short run, that's not going to be an issue, because all these people are going to get their money back and then some in a lump sum. So I don't see it as a major thing, and I think that's why the market looks past that and through a shutdown. In fact, generally this type of thing is good. They're going to eke out a deal, and if it gets them to the table and works out some bigger issues at the same time, that could be a very good positive for the market overall.
Yeah, and certainly the market is also watching good old-fashioned earnings, Art, and we're looking at a lot of big names, a lot of big industrial technology names coming out. In particular, that sensitivity to China, which we started off the segment talking about. But so far, the earnings seem to be Stanley Black & Decker yesterday, for instance. Pretty decent earnings, J&J, but it's the forecast that seemed to be the problem. The uncertainty, is that more of a China issue in your opinion? Is it the global growth story? Is it the shutdown? What are you seeing from these CEOs as they're coming out and speaking?
Yeah, sure. It's amazing when you think about the fact that, yes, fourth quarter earnings are actually going to be pretty good. I think that's, so far with a small sample set, we've seen about 80% of S&P 500 companies beating their numbers, and that's above the last 3 quarters. So that's fine. The problem is all of those headwinds that you just spoke to make it hard for a CEO to get on the conference call and not be reticent about, what kind of guidance they can give. Right. If in fact we knew that, the trade war was going to be over in the first quarter of this year, then you'd have explosive guidance. I think you'd have companies making a lot of business decisions that they're not making right now, or at least putting off right now. So, yeah, I think guidance is going to be the real bugaboo in this earnings season, and we'll pay close attention to that. It's going to be hard. Well, I think the market's at an interesting juncture, right? We sold off about 20%. We've clawed back about half of that. We're right in between. We're perfectly neutral at 15 times. So we're at a perfect place to enter earnings, and guidance is really going to be the driver.
Yeah, and it is about the guidance. And real quick, Doug, I do want to give you last word here. Sure. We're going to be hearing from Ford. We're going to be hearing from Texas Instruments. That's going to be an interesting China trade electronics story as well. But IBM and Ford in particular, even Intel, these are key numbers, and those forecasts again are a little dicey right now.
Yeah, I wouldn't be surprised if after this quarter, next quarter, things dip a little bit. But I think that sets us up well for the second and third quarter to be very good and probably higher than expected and back to all-time highs, which does really well for the market. Look, China isn't really necessarily going to do a major deal until they know Trump is going to get reelected, because any normal Republican or Democrat is going to go back to the old ways. So they have to find out who they're dealing with and whether or not they're going to have to deal with him for another 4 years or not. So it's going to be slow. But at the end of the day, those are some good things to look for later in the year. So put your money in your 401k and max it out.
Oh, okay. All right. Well, it's faith in the markets. We still have that. Art and Doug, guys, thank you very much. Appreciate it.
Thank you.
Anytime.